I'm Ashton from the Crypto Coin Show, and today on Blockchain Interviews, we have back with us Michael Kong, CEO of Sonic Labs. Michael, welcome back to the show, and thanks for being here.
Hey, Ashton, it's been a while, but thanks again for the invite.
Definitely, so much has happened at Sonic. Last time we spoke, we were talking about Fantom, and there's been a whole major shift with the entire protocol, and the team has had significant growth in their last 4 months since the launch as well. I would love to hear all those updates, but maybe you can talk at the beginning here about for a sort of like a high level on what is the Sonic protocol, what makes it unique, and what are some of the functioning parts of it, and then we can dive into all those latest updates.
Yeah, sure. So, first and foremost, the Sonic network is built on very much a improved technology stack from the Phantom network. So we spend a lot of time focusing on basically achieving scalability in two ways, and it comes down to transactions per second, which is basically the network capacity or how many transactions can your network handle per second, and more importantly, in my opinion, what's known as like time to finality, right? Or how long does it take for a transaction to be confirmed? The analogy I would like to use is, when you look at Google, right? The number of queries that Google can process per second is equivalent to transactions per second for the Sonic network, and how fast and how accurate, the query is returned back to the user is equivalent to confirmation times. So on an individual basis, the confirmation times is what the users really care about, not the transactions per second. In the aggregate, though, the transactions per second matter because if
Mm-hmm.
you have low transactions per second or low network capacity, it means that the ability of for your applications to gain large numbers of users is really limited, and that if you start reaching your transaction per second limit, then your confirmation times start experiencing a lot longer. And that's pretty much what we had experienced in Fantom in 2021. So Fantom in 2021 obviously got a lot of traction. It was known as like the DeFi chain back then for a number of reasons. It was getting a lot of applications. It was getting a lot of users. But we had occasions where there was so much traction and so much stuff happening on the network that it just slowed down the network. That transactions that were usually confirming in about a second or two were taking 15 seconds, 30 seconds, etc. And that's simply because the network was not scalable enough. Now we've solved a lot of those problems through a lot of what we call performance engineering on the database side and the smart contract processing side, such that a lot of those issues are a thing of the past. Just to highlight a couple of data points, like by chain spec, they announced, I think, like 2 or 3 days ago that there was one block that processed like over 1,000 transactions in that single block. I think off the top of my head, like 1,122 transactions. And that was all confirmed in under zero point 0.5 seconds in a single block, all finalized, one block finality. And if you extrapolate that across transactions per second, it was over 2,000 transactions per second. And a lot of those were smart contract-based transactions. I mean, this is like many, many fold more than the Phantom network. And that's very important because, as the network is getting traction, as it has been with, particularly on the DeFi side, with over $500 million in USDC, bridged issuance, in over $1 billion in TVL, it means that the network is still very, very smooth. And if you go to sonicscan.org and you look at the block times, how fast blocks are produced or transactions are confirmed on the network, it's like of the order of like 400 milliseconds or zero point 0.4 seconds. So that is in a nutshell, the difference with say Sonic as opposed to Phantom. And there's a lot of differences as well on the business side that I guess we can get into on this interview as well.
Yeah, no, that's a great intro, Michael, and that's a great problem to have. I think that there's so much demand and there's a lot of transactions that now there's a new problem of like let's solve for further scalability, and that looks to have been solved with Sonic. But yeah, it's better to have that problem where there's a lot of traffic, and yeah, the DeFi chain continues to grow strong. I'd be curious to jump into the DeFi insights and see where that is compared to the overall crypto scheme. And I think there's been a lot of traction, despite the sentiment in the first quarter of 2025. I think maybe people were hoping for the moon with the Trump administration, but I think we really needed to have a little bit of breathing room because there's been such growth in the last 2 years since we spoke with Fantom, and just the Bitcoin ETFs coming out, institutions coming in, setting us up for even more widespread adoption outside of the people that are already in the echo chamber of crypto to get new players in. And I think that's what is great for Sonic to set up for the future, as this foundation has been laid to now get new people in that are maybe they're hardcore Web 2 users, maybe they're just casual computer users, to actually onboard them into Web 3.
Yeah, I totally agree there. Like, as I've said before in like other interviews, I look at blockchain adoption akin to like internet adoption.
Mm-hmm.
It's interesting always watching like old clips that you can see on like YouTube and stuff people uploaded about people using the internet in the early days in the 1990s, and the people were like, oh, what is a web browser? Or what is a mouse? What is the internet? Oh, I can like buy stuff and stuff. Wow, this is like quite weird, but also like interesting. And I think it's like a similar thing to blockchain is that blockchain a lot is obviously talked about a lot. It's talked a lot by the Trump administration and people within the Trump administration. But if you look at like actual adoption and how many people are actually like holding and using cryptocurrency assets, it's still very, very few people. I mean, just anecdotally, like I know a lot of people who I know a lot of people who are not in the crypto space, and I talk to them, and a lot of them are still not in the crypto space, despite how much is like talked about, particularly in like US politics these days. And that to me is a good sign because it still means that we're early days. And I think a lot of people are still getting used to, oh, how do transactions work? Oh, how do browsers work? How does all this stuff kind of work? And I think the user experience
Mm-hmm.
in many aspects. User experience when it comes down to like chain performance, which is what confirmation times is about,
Mm-hmm.
helps onboard people. User experience in terms of the applications that are coming on board, they're always trying to make it easier to submit and execute transactions, obviously. And then you look at it from like say the wallet point of view that wallets keep upgrading and keep making it very, very easy for a lot easier for users to be onboarded. So I think over time the user experience improves. I mean, that's naturally what happens with technology. You look at what how the internet first began, it was very clunky and stuff, and it wasn't that pretty. Now it's a lot more sophisticated and pretty and easier for people to use. And on the other side, it's just like education over time that the more people are aware of it, network effects, the more they, play around with the blockchains and the transactions, the more they get used to that kind of environment. And so in terms of crypto adoption, it's still very early on, but I think there's a lot more people are going to join over time. That it's just like a matter of time for the reasons I outlined.
Mm-hmm. Definitely. Uh, and, a lot of people, obviously, they first hear about Bitcoin, then they start going down the rabbit hole to Ethereum and other layer one protocols. How do you think that chain connects from when people first hear about crypto, and as you said, they're hearing about it, but they don't really get it, and they don't actually own it yet, and then they own some Bitcoin, and then they start going in. How does that chain connect, and how can you shorten that chain for them to join into the Sonic ecosystem and test out the different dApps, whether it's DeFi, NFTs, just doing transactions on the network? How can you increase that adoption earlier on in a person's crypto journey?
Yeah, that's a very deep question. So usually, most people have heard about Bitcoin even if they don't own it. Um, a lot of people would have also have heard about Ethereum as well. So they're like in a way kind of like the gateway, right? Just naturally because they're just like the biggest cryptos that are out there. So naturally, I think a lot of people when they start their crypto journey, it was the case for me, although it was like quite a few years ago, so there were like fewer coins around. Um, but usually it's you start off with Bitcoin and then you discover like Ethereum and you discover like all these other tokens as well. I don't see that like changing as a whole. I don't see there being like many users, to be honest, who are completely non-crypto and suddenly their first crypto is Sonic. I think to some extent that is the case, because we're getting involved in like non-crypto marketing. Sometimes people's friends tell their friends who are non-crypto to begin start using Sonic, and that obviously like is the preferable like customer we want to get in, because they're the ones who have only like really experienced Sonic, and I think they have a really good time there, with all the different yield opportunities with the much more scalable behavior that it has, say, compared to Bitcoin and Ethereum. But usually, it's obviously Bitcoin and Ethereum that most people start off with. And that's fine because, people get familiar with the environment with Bitcoin and Ethereum, and then they look at like other tokens and other opportunities that are out there. They kind of like go down the list of coin market cap, so to speak. And that's fine because what we're trying to market to them is like, hey, you want to come onto Sonic because you're going to have a good time. All right. It's
Yeah.
secure. There's all these yield opportunities. There's all this different stuff that you can do on chain. And the mainnet is very, very smooth. As I outlined that, during, peak performance times, during less performance times, in terms of the number of transactions being processed in a given amount of time, the network is just running smooth as butter. And so if you look at like a lot of the marketing that, we've been doing on our account, Sonic Labs account, or my own personal account at Michael F. Kong, you'll see that a lot of it is just talking about the opportunities that exist on the network. That if you're a user, there's all these DeFi opportunities, there's to some extent these NFT opportunities and games that are on board. And I also like put out posts talking about, why as a user, should you be using Sonic as opposed to others? And also to developers, why as a developer should you deploy on Sonic as opposed to others? And so in my opinion, when it comes down to business, it's all about putting yourself in the other person's position and saying, why would I want to buy from myself? Why would I want to use my own product? And if you can answer that, why would a dev want to deploy on Sonic? Why would a user want to use Sonic? If you can answer that question really well, then you're basically doing your job.
I love that. And I want to talk about the users of the apps after this. But before that, you actually need to have apps. And that's where the developer experience comes in. I did see your recent X post about why are developers choosing Sonic. It's no fun if you have an iPhone with an app store that only has 5 apps. You should get bored right away. It's great to have a variety, and obviously making the developer experience as easy as possible for innovators and entrepreneurs to come in and develop an app and choose Sonic to for that environment to build the app out of any of the other potential blockchains, maybe multi-chain. But how does the protocol make it easy to develop apps and incentivize developers to choose Sonic as the place to do it?
Yeah, so as you mentioned, there's like a bit of a chicken egg problem, right? That obviously to get the users, you need to have developers. To get, developers, you need to have users. So the way we kind of like dealt with that early on, which is like what other chains have done, is simply like via like incentives, right? So we have like an airdrop program that if you interact with the chain in certain ways, you accrue these points, and then these points will allow you to claim tokens over time, right? And so that makes it attractive for users to get on board, but it also makes it attractive for developers, because developers know that if they deploy on the network, they are going to have users that want to interact with their application because they can earn eventually like an airdrop. And also we had other incentives called the GEMS program separate to that, where we basically give out what we call GEMS to developers who deploy on the network, and they can choose how they want to distribute that to users. And we've also done direct grants as well to projects that we think would be great for growing the Sonic ecosystem and great for users. And so we've given projects a variety of grants. Some that have deployed on other chains have come to our chain. Some native projects deployed on the old chain, the Fantom chain, also came over to Sonic. And so we have incentives out there, not because incentives are something that can last forever, because obviously they can't, but they allow you to get the ball rolling, right? They allow you to start the momentum of the network effects. And as long as you're able to do that, it's kind of like a snowball, right? You'll start getting more users organically, you'll start getting more developers organically as the user base grows and stuff, because it's a bigger, customer base for developers. And then eventually you have a very thriving ecosystem. And that's what we want to have in the end. And this is why the technology is very important, because if you don't have like scalable technology to enable the snowball to take effect and become as big as possible, the number of users and number of developers, then you're always going to be limited in your growth.
Definitely. And you mentioned, and one of the staples of Fantom was that it was the DeFi chain. I think DeFi is one of the greatest use cases right now that we have in terms of dApps or any financial applications, and just bringing more utility to the coins that we have on the networks. when you, as you said, you're putting yourself in the shoes of the developers or the users, what do you see as things that need to be there for a great DeFi ecosystem on Sonic? You keep mentioning the yields, which is great, and the security and just the experience of doing transactions and settling and stuff like that. Are those the main things that are going to help continue to drive DeFi on Sonic?
Yeah, it comes down to ultimately like what people want, right? And a thriving like DeFi ecosystem, the base of it is a lending and borrowing protocol where the lending rates are competitive to other chains or other opportunities outside of crypto, right? It is why like big lending and borrowing protocols like Silo and Aave that are deployed on Sonic are very important. Because if you have a lot of um, stable coins in particular that can be borrowed on the network, it means that those stable coins can then be used in like other aspects of DeFi, whether it's like trading, long perps, etc. It really is like the foundation for a thriving DeFi ecosystem. And so, you see that like on Ethereum, you see it on other networks, the big DeFi ecosystems really stem from that. So as long as we have like a lot of people willing to like lend and borrow on chain for whatever reason, it could be for, tax effective reasons, it could be for, more speculative reasons, it could be for any reason, then that's the basis for a thriving ecosystem. That's why we directed a lot of initial early incentives towards these lending and borrowing protocols, and it's going really well. As I mentioned earlier, we've got, over $500 million now in bridged USDC. I think the total stablecoin issuance is like 600 or 700 million. A week or two ago, we passed the 1 billion TVL mark. Now, TVL is not the only metric that's important, but it is like an indicator of the level of activity that's happening. And you can see that some applications have done extraordinarily well, including, for example, Shadow, which is a native like VE free variation that's deployed on Sonic. I think it's like the seventh or the sixth most like fee generating app in the entire world. And that's just on Sonic itself. And they've made tens of millions of dollars in fees. And they've only deployed for about 4 months now. And they're doing really, really well. And part of their success about why they're doing well is because they just have such a great user experience. If you go to shadow.so exchange and you want to, deposit into the concentrated liquidity pools or trade and all that, they have deep liquidity, and they integrate with a number of other protocols in the network, and you just get like really good rates. So as long as you have the foundation there, which is, this deep liquidity via lending and borrowing protocols, everything else on top of it works really, really well and is very smooth.
Yeah, no, that's really great to hear. With the recent deployment of the USDC and the TVL milestone of a billion, that's great. Can you talk more about stablecoins and the USDC? Is there, because obviously that's important for DeFi or for lending and borrowing. You don't want to be borrowing something that's super volatile and then doubles in price and you owe a lot more. Stablecoins are so important for DeFi, and I think the Trump administration or the legislators are coming out with more legislation to help adoption of stablecoins, because I think the institutions also understand it's integral for them if they're going to be moving billions of dollars to be using stablecoins as well. So that was a recent deployment of USDC on Sonic. So can you bridge USDC from other chains, or do you just use Sonic to buy the stablecoin? How do you get into that? How does that exactly work?
Yeah, so users can bridge the stable coins from other chains. So we have our own native bridge that we call the Sonic Gateway. That's a very, very secure bridge, which basically generates receipts from Ethereum when you bridge any asset from Ethereum that's listed, including USDC, over to Sonic, which means that in the very unlikely event the bridge were to go down for whatever reason, after 14 days, you'll be able to get your money back. So there's a lot of security and fail safes has gone into our Sonic Gateway. We'll also have, and in the process of doing more of it, what we call formal verification, which is mathematical proofs as to the proof system and security of the Sonic Gateway. So we have our own native bridge that a lot of people have used from Ethereum to Sonic. But there are also third-party bridges as well that you have to trust their security, but do make it easy for people to bridge over from other chains. So for example, there's like Rhino Bridge, there's D-Bridge as well, that allows you to bridge USDC from a variety of different chains, from Solana and Avalanche, and I think maybe like up to 20 different chains. And not only be able to bridge USDC from that chain to our chain, but if you have other assets, be able to swap out of those assets to USDC on Sonic as well. And so
Hmm.
there's a lot of there's also a lot of inflows that have come from there as well. But what's also very important to note is that unlike Fantom, Sonic is going to have a native USDC issued. There's going to be an announcement very soon as to like the specific date of when that happens. But as we already announced with Circle, we've got native USDC coming to Sonic, and that's really important for a couple of reasons. Most important reason is to do with security. Native issuance means that every single USDC that's issued on Sonic is backed fully by the reserves at Circle, meaning that you can always take your one USDC on Sonic, or you will be able to, and be able to go to Circle theoretically and redeem that for $1. Is also very important because a lot of people have trusted native USDC on other chains, etc. And so there's a trust element involved there. And also, what's notable about this native USDC deployment on Sonic as opposed to others is that when native USDC was deployed on other chains, it was alongside what was already called bridged USDC, right? And so that means that on some other chains to this day, you still have two different kind of USDC tokens. You have the native USDC token, you have the bridge USDC token, and you have to like manually swap it yourself if you want to. And that's create a lot of problems because it creates liquidity fragmentation problems, right? Which means that you don't have as deep liquidity pools for the native USDC. Our implementation, because we followed the bridged USDC standard that was taken from Circle itself, means that we'll be able to upgrade the bridged USDC token to the native USDC token and hand control over to Circle, meaning that all of the bridge USDC will automatically be converted to native USDC, and all the protocols that currently support the bridge USDC will also support the native USDC. And so it's a much more seamless experience compared to how it was done in the past, because of the way that Circle operates the upgrade standards now, which is really, really good for us because we're not going to have a separate bridge USDC token that's going to like exist forever out there. That like applications will have to swap from the bridge USDC to the native USDC. It will all happen like under the hood. So I think that's very, very exciting. And it's going to be really, really good for the ecosystem.
Yeah, I completely agree, and I've had that personal issue. I had, this bridge USDC, and I think it confuses a lot of people. They're like, they're both USDC, but this pool, like I can't swap it, and it's like, why is this, that's one of the barriers to mainstream adoption, and like, why are there multiple tokens that are almost the same, and I can't figure it out. Even technical people are having problems. So I'm glad to
Yeah,
hear
and
that.
it's also kind of like confusing to people as well. Like, if you're like into crypto a lot, you probably know the difference between like a bridged and native. But if you're new to crypto, you're not going to really know the difference, and so you're not going to be sure. Okay, there's two USDC tokens here. Which one do I use? It's kind of like having bridged US dollar. You just imagine like walking around the US. Bridge US dollar, and then you have like US dollar. You have two different sets of notes. It can be confusing to people.
Definitely. And I'm glad that that's being solved on Sonic. Now, I want to look at, DeFi from a very high level in like all the chains. There's fragmented liquidity. It's not perfect to be able to bridge, even on the same chain, different pools. There's little differentiations, and then between chains as well. Where do you see DeFi in the coming years, increasing the liquidity potentially? Obviously, this is a great step with the USDC merging in with the bridge one. What about with other chains, or how can we increase liquidity so we can get a pinch closer to kind of stock market traditional finance liquidity, which traditional and institutional investors are used to? We need to upgrade DeFi.
Yeah, so a lot of it just really comes down to, as I mentioned in one of my earlier answers, just comes down to like adoption over time. So the more people that use crypto, they'll start converting some of the non-crypto assets to crypto assets, and that's how ultimately you're going to get a similar level of liquidity to what you have on the stock market. Now, I don't think crypto is going to have the same or very similar level to what we have on the stock markets, because that's an enormous amount of money, and a lot of people have exposure to the stock market. A lot of people have exposure by default, via their retirement accounts, and then they probably don't even like really know that or pay much attention to it. But I think there's still going to be substantial growth in DeFi, and it's going to be some substantial fraction of the total value of the stock market. So over time, it's just about adoption. At Sonic Labs, we're trying to appeal to crypto and non-crypto users, and the crypto users that we're appealing to, are obviously like people who already have assets on chain on different networks. So we want them to bridge over the USDC from other networks onto our network. Now that's good for us. It grows our network. But net, in terms of crypto, if one person moves from one project to another, there's still the same amount of crypto assets or same number of tokens out there overall for the entire ecosystem. And so if you're talking about in aggregate the cryptocurrency industry, it's about getting new people in. And over time, that's just going to happen as more people hear about crypto, as more people experience it, as more people get used to it, as more people tell their friends, as the applications become more sophisticated, as the user experience becomes easier. Just like the internet, the internet started off a small and kind of niche in the early 1990s, and now it's absolutely massive with a whole bunch of different applications that are out there. And users, the early users, told their friends about what they could do. They joined, and then they told their friends to join, and that's how you basically have the network effect take place. And I think something similar is happening to crypto. It's still early days, but the adoption will just increase more and more and more over time. I mean, just to highlight, a little statistic that I remember reading about a couple of years ago. Every year on Ethereum, the number of users went up, even during the so-called bear market. So if you looked at like 2018, how many people were using Ethereum, the number of transactions submitted, it was higher than in 2017. And so even though obviously the price of Ethereum, was lower in 2018 than 2017 on average, you still had adoption year on year. And why is that? It's because despite, the market conditions, people were telling their friends about Ethereum and they were getting involved. And I think that trend is just going to continue. And, it's just mathematical that, network effects are exponential. One person tells two people, they tell four, they tell eight, etc. And that's what we're seeing in crypto.
Yeah, no, it's great to see that those adoption numbers aren't just because of the price. And of course, when Bitcoin goes up and it gets in the news and new people hear about it, it's great for adoption, but then people actually see the fundamental value of global currency and decentralized networks, and then they stick around, even if the price goes down a little bit. Eventually, it's probably going to go to new all-time highs and keep going. But I'd hope, like us, people are in it for the technology, understanding that this is the next evolution of the internet and of money. So I'm hoping we can get a killer app that brings in hundreds of millions of new users. It might not be as easy as that, but there's definitely adoption. There's so many different chains, so many different applications. We're getting into gaming, not just finance, but all the other use cases are all bleeding in, a little bit of blockchain in there as well. So I think we're getting that adoption we need, but it's going to take time. Of course, the stock market's been around for decades and decades, that crypto's still in its infancy. So I'd love to hear some of the future plans for you and the team at Sonic for 2025. The networks has only been launched for a few months now, and it has significant growth so far, but I'm sure there's much more up the sleeve. Can you talk a little bit about the roadmap and any of the planned releases or what the team's working on behind the scenes?
Yeah, so there's a lot of things that are happening. Like on the technical side, we announced recently that we have a new consensus engine that's under development. Actually, it's being developed. It's just under testing now. That will also be mathematically verified in terms of like how it confirms transactions to a large degree. We haven't named that yet. I just called it Consensus 2.0 at the moment. So that's something that when I spoke internally with the team, they are confident they can release this year. They've already released some preliminary numbers in that, running nodes is a lot more efficient. I think, yeah, 68% reduction in memory, which means that if you're a node provider, you can run on lower specification hardware and have the same performance as you do right now, which significantly lowers costs because you don't have to have as much RAM available. Um, we also have like a 2 times performance improvement in terms of consensus speed. So, you look at like how fast that transactions are already confirmed on the network, it'll even be a lot faster than that. And there's all these other benefits that, I don't want to front run the technology team about because they're still, getting more confident on the numbers, but they're looking really, really good. So if people out there think that, the Sonic technology is already great, which I honestly think it is, that it is the best technology stack out there that's already in production, it's going to be even a lot better. On a few other technical matters that are more, I guess, like directly like business related, we've got like 3 other like main features that are coming out. Um, so we've already launched like fee monetization, and we're making the onboarding user experience process a lot better, where people can just like register themselves rather than relying on the foundation at the moment, which is quite manual. So that's expanding. But we've also got other ideas that are currently under development, such as gas subsidies, account abstraction, and dynamic fees. And of the 3 that I mentioned there, the most exciting to me is the dynamic fees, because it means that applications will be able to determine what their transaction fees are going to be for their specific application. So the problem right now with crypto as a whole is that the transaction fees are determined on a network-wide basis, not on an application basis. And why is that important? Is because you want to have a competitive marketplace. You want applications to be able to set a fee such that they're able to make as much money as they can via fee monetization, which is you get 90% of the transaction fee that your application generates. But you don't want to do it to such an extent that you start alienating your users, right? And so over time, you have applications competing on transaction fees, and users will figure out, okay, that I'm happy to use this kind of application because I'm willing to pay this certain amount of transaction fee as opposed to another application. And so you just get better like price dynamics because you have a more competitive market of transaction fees. But in terms of the others, like gas subsidies, it's about an account abstraction. It's about onboarding users, right? So with gas subsidies, allowing people to pay for other people's transaction costs means that one person, if they want to like subsidize their users to get them on board, because maybe they don't have S to pay for their initial transactions, they're able to do that very, very easily via an interface. And now account abstraction, which I think a lot of crypto people are familiar with, is also about being able to onboard users because it allows you, to delegate your some permissions from your wallet to another account, and so you can get more like what we call like intense-based applications running, which just improves the user experience if people want that. So there are these like 4 key business features that are under development. One that's already launched, which is the fee monetization, which we've already seen tremendous traction on. There's already been hundreds of thousands of dollars worth of claims, even though the network's only been live for the past few months, as you mentioned. And so those are the key features that we're focusing on. And on the business side, it's really just expanding to different DeFi applications that are out there that are being onboarded. Also, a few other games as well, and NFT projects that, I don't want to front run the announcements as well, and hosting a lot more community events as well. So this year, we launched Sonic University. We launched Sonic Sodas, which means that we help sponsor events around the world that allow people to to talk about Sonic, have speakers. We have had events in like Australia and London and Lisbon, and in some other like smaller countries as well that people don't really think about that much, like Nigeria, which is a big crypto scene, and elsewhere. We're hosting more events, more dinners for certain people on the network, etc. So a lot of it's just really about outreach. And as long as the strategy is working, which seems to be working at the moment, which is getting those numbers up and scaling up the network, then we should just keep executing on the strategy.
Yeah, no, those are some incredible updates, Michael. And I've worked recently with Gasp, which is a gasless DEX. I saw that they just integrated Sonic, and they're I'm not sure exactly how it's working, but they're subsidizing the gas fee, so you can trade without paying the transaction fee on there. But I think that dynamic fees function is incredible. I think right now the way that it's set up on other blockchains, where if there's one killer app and all the transactions are going through there, and then there's other applications, they're subject to the whole network of, this one app is clogging up the network, and now we have to pay high fees on a different app. We need to have more business sense in that, where there can be more competition, and you can set it, whether it's through subsidies or other ways to drive competition between apps. So I think that's something that's definitely needed in the blockchain industry. I'm glad to see that coming out on Sonic.
Yeah, for sure. I'm sorry, just to kind of elaborate on the importance of like, dynamic fees. Some people might be willing to pay more to use certain applications than others, right? So I can envision that, when it comes to gaming, games want to set low transaction fees, because they want to get as many users as possible. And obviously, when people are playing a game, they can submit quite a few transactions there. So if the transaction fees are high for a game, then it becomes not really feasible for people to want to play the game because they're paying so much. So I can envision that probably a lot of games out there will set very, very low fees because they're all focused on volume. But say a DeFi application where there's yield opportunities, etc., and maybe less transactions on a per individual basis, they're probably going to charge a much higher fee because people are willing to pay that much higher fee because they're already earning more and they're submitting fewer transactions on average than say playing a game. So this is why dynamic fees are important, because you don't want to set one fee for the whole network where maybe it's too little for DeFi applications, maybe it's way too much for gaming. You want to have the applications be able to choose it to basically suit their user base in the end.
Definitely. No, I'm looking forward to seeing that and the other updates that you mentioned as well. What's the best way to follow along with these updates that you're talking about, and also just to test out the current apps on Sonic? And I saw the NFT post. It looks like that's also hot. So I know there's all these different industries that are already live on Sonic. What's the best way to explore the ecosystem and then stay up to date?
Yeah, so if you want to stay up to date, we push our announcements usually first and foremost on X or Twitter, which is pretty typical in crypto projects. So you can follow our account at Sonic Labs. You can follow my personal account at Michael F. Kong as well. People follow Andre's account, and there's a few other accounts as well. I'm associated with the main account at Sonic Labs. In terms of getting onboarded, you can go to our website, soniclabs.com. And on the front page, we have a three-step process as a developer or as a user on how to get onboarded, as well as further details, obviously, about the team and the airdrop and more technical documentation. So I'd encourage people to go to soniclabs.com to get started.
Sounds great, Michael. Thank you so much for all these insights into protocols, DeFi, stable coins, and everything else in how Sonic is innovating in blockchain. I love to see it. I'm hoping we can get some more of those killer dApps, and regardless, just upgrading the user experience, the fee experience, the speed of transactions and confirmations, as you mentioned in the beginning as well. I'm definitely going to go test out some more apps in the ecosystem as well myself. I've been in it a little bit, but there's so much to explore, and I know there's a lot of development going on the chain right now. So I'm wishing you and the team all the best, and would love to follow up again in the near future.
Yeah, for sure, Ashton. Again, appreciate the opportunity. Thanks for reaching out.